Welcome back to Trading 360. I'm Nicole Petalides, live in New York City, live at the New York Stock Exchange. Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades is Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Good morning, gentlemen. Great to see you both on this Friday. Alan, let's start here taking a look at Newmont. This is the name that went from 86 down to 43 in no time. Where do you think it's headed from here, and why?
Well, we've got to get the backstory. First off, we're halfway home in the S&P. We've recovered half of our losses. And every time that's happened in history, guess what? The market's had a full recovery and come back. So there's still a lot of upside, and I'm very, very optimistic. Part of this equation is the dollar size. And I know we talked last time about the dollar not going higher because interest rate futures, as we go out in the future, we're going to top out at 4% here at the end of this year. Then we're 3.5% the year after, 3% the year after. And when we get all the way out to 2025, we're at 2.5%. So the markets are telling us that this continued strength in the dollar is not going to happen if we're not going to be raising rates. Okay, so let's get back to the trade, because a declining dollar, that obviously helps out gold. Gold's been moving up 7% in the last couple of weeks, and it has been trading between 1,700 and 2,100 over the last year. So 1,900 is an important pivot. We're at 1,800 right now. If you look at the Newmont Mining stock itself, we're seeing bullish divergence. It just made new lows, but not new highs in implied volatility. And it hasn't bounced at all, even though gold itself has moved up. So it's a good risk-reward play. From a chart standpoint, Ben and I are going to get into this. 45 to 50 for the last 3 weeks. A breakout in that range targets 55. And 65 is the midpoint up above. So there's a lot of upside potential here. I'm looking at a January option. January has almost 6 months of time. A January 40 call. Again, this recent low has been 45. That January 40 call is trading for about 7.5 or so. It's $6 in the money. And if we get back to that 55 level, which is a very modest expectation, if we get back to 55, that option nearly doubles in value.
Right, understood. Well, I don't know. Let's ask Ben. What do you think of this chart here, Ben?
I would have to agree with the mindset, you guys, but I don't think price is necessarily supportive of it at this point yet. Now, that could change dramatically if gold were to continue to rally, but at this point, around the 1,800 level, continues to struggle, in my opinion, at least in terms of providing anything to get too excited about to the upside. But let me just explain myself here and point out how shares of NEM, for the most part, broke down after earnings. If you remember, we're talking about back in the end of July here. This chart goes back to the 18th. You can see here's results, and since have been mostly sideways. I've got it around, I think it's a little bit elevated here, where I wrote 47 just to keep it nice and round down to 44. But I want to point out that the broader market this week is really what I'm focused on, back above the June levels. As we take a look at the daily time frame here, you can see, or I'm sorry, the 1 hour, but this goes back to show the June highs up around 70, nowhere near that level. So again, supportive of, if this starts to play catch up, yes, we could see a nice move higher here in terms of, there's some big room to the upside here, though, in terms of before we can regain some of those key levels that we established on the way down. So here you can see the move we were just talking about in terms of, what was it, 56 down to 43, I think it was. Now we're looking at 86 to 43. So that was just part of this bigger picture move that we're seeing here on the hourly time frame. I want to show you how, again, as we just kind of take another step back on the daily time frame, this is just part of the bigger picture move, not only 56 to 43, but look at this. 86 is where we topped out, if you remember. That was back in the middle April highs that we saw. Now, here's what has me concerned. Not only are we struggling to get back to those June levels, the broader market doing so well, and understand, I don't necessarily want to compare apples to oranges here, NEM versus the ES necessarily, but not a lot of enthusiasm here for investors in terms of just risk appetite for this one. But also look at how we recently took out some key lows. We're talking about lows from June of 2020. We've got lows from March of 2021 and November of last year as well. So that has me a bit concerned. I also noticed here to this week now, and again, supportive of Alan's argument, stopping a 10-week slide to the downside. So things are at the very least slowing some of the momentum lower, but up only 4 weeks since mid-April, guys. I mean, again, my point here just being, you guys know I don't necessarily be first have to be first in terms of getting out on that limb. I've seen them snap too many times. You think it's overdone, but I like to see areas that were established on the way down, taken out on the way up. We're mostly sideways still here. We haven't yet, still have yet to do that, simply put.
Yeah, understood. You really like to see some trends in the big picture here. I will say what was interesting here, a name like Canaccord, for example, has upgraded this name, though they lowered the price target to $60 from $66, but they had a few reasons fundamentally why they thought the selling was overdone. To your point, Alan, saying that selling was overdone after the EPS miss. There was some timing issues with the sales of gold. They had a negative pricing adjustment and some profit sharing that they had to deal with and some other abnormal items. And as a result, they thought the selling was overdone on this name. Final thoughts, Alan?
Well, what's really important here is, as much of the stock, it's the strategy. So I'm looking for just a very modest move. A move to 55 based on the technicals is a small percentage move, but that produces 100% gain in this deep in the money option. So that's the game that I play. I've limited risk. I've got plenty of time for good things to happen. We can see how things develop. And if and when we get a modest bounce to get to that 55 level, that option gains 100%. That's what I'm looking at. I'm looking at math, and Ben will definitely agree the risk reward is on the bullish side at these levels.
Does he definitely agree? I don't know. Do you definitely agree or maybe agree?
Well, like I said, I think that we need to first establish some sort of momentum to the upside. When I look for that, I think it's going to begin. I look at the more granular, more intermediate time frame. Again, I don't necessarily want to trade a 5-minute or an hourly time frame when you're looking at stocks, but this is it right here. I mean, you can see the momentum to the downside. We still have yet to reverse that. You see the elevator shaft into earnings, and there's just no rejection. There's sideways consolidation here. The first level that would get me at the very least excited about this one would be 47 up and through that. But again, it's just, I'd have to go back into the bigger picture here to find something significant, and it'd be quite a ways above that. Again, I'm just focused on this most recent area consolidation. Until we take out 47, in my opinion, we're still accepting this most recent move lower, no rejection of it, and I have a hard time getting excited about a stock that looks like this.
Right. I mean, this is starting to remind me of the old phrase about horseshoes and hand grenades. Okay, let's not get too definite on anything, right? Let's see. We'll see. We're with you, Alan. That's for sure. All right. Tell me about Camaco Ccj, which right now is trading at 25.12.
Again, we're digging for profits here. This is a commodities-based stock. Obviously, they got knocked down when the Fed intentionally did so with their action, and they got the exact results they wanted, knocking down oil, knocking down a lot of these commodities and so forth. But like I said, the dollar's at play here. So this is a stock that's been between 20 and 30 for a year. We're right now sitting at this 25 pivot. It's also had a series of higher lows and lower highs, forming this giant wedge with an apex here at this 25, a $10 wedge breakout at 25 targets 35. So I'm looking at the January $20 call, which is about $5 in the money. That option's trading for about 6.5 again, and it's deep in the money. It's going to have a high delta. It's going to give a big payoff on a modest pop in this stock. Now, this stock didn't have as much of a drop as Newmont, but it did have a very healthy pullback. But in the big picture, it's been very, very strong over the last couple of years.
Right, and they talk about production. I mean, we do see some good signs, bright signs in the latest earnings report. Ben, your thoughts on CCJ?
All right, Alan, we're on different pages here today. It's not uncommon for us to find ourselves butting heads, but I guess that's what makes a market, right? You have to have two sides. Let's begin with the hourly time frame here, because what concerns me is, well, there's a few things. First and foremost, a series of lower highs. I'm going to talk a little bit about the importance of the middle of the balance. A minute ago, we were talking about the upper and the lower extreme, right? And how we're just kind of in this range, need to get above 47 in terms of NEM. Well, I'm noticing here, first and foremost, the weakness that's come into play. Series of lower highs, kind of double topped up around this 29 level, and right now struggling. If we roll over here now, and again, this is an if, obviously, we're kind of a pivotal level, I think, is the short of all of this. But if we roll over here right now, I think that we could be in for some further weakness. And the reason I say that is because when we get into the daily time frame, you'll see that Well, basically since we shot up and through this 1820 level back in September of last year, we've been kind of sideways around this 25-26 level. It's a pivotal area in terms of the range that we've established, 3250 being the upper extreme, lower extreme that we traded down to in the beginning of January, down around 18. Now, as we kind of teeter around this level, you guys know how I feel about it. A tipped one direction or the other favors that extreme in the direction of. So this is a pivotal point. It's a midpoint, middle of the range that we've seen again since September of last year. And then what concerns me though here is look at this. As we look at the weekly time frame, we were right here is really the range, 56 down to 530 on the bigger picture. So now we were just kind of zoning in on this range, right, a minute ago, and how 25 was significant. If on the bigger picture we fail here again, which it appears we just did around the $32 level, consolidating, what if we open up the door to the downside? I just feel like this is an example of a stock, shares that have really had a hard time regaining composure after coming off the pandemic lows ultimately and taking out key levels that were established and holding above them, simply put. So again, a pivotal level right now in terms of the daily time frame. We can look back at that real quick, but also pivotal in terms of the weekly as well. And if we roll over in that midpoint here, again, we could be in for some further weakness.
Right, understood. Okay, final thoughts here, Alan.
Well, for me, it's again the strategy. I get a cheap look. I have the right to be long from 20. What's the year low? 20. That's been the solid support base. I have the right to be long from 20. I've got an in-the-money option. And guess what? If it doesn't break out above 25 in the next couple of weeks or months, it's a January option. It's still going to have a lot of time value left. So it's about the probability. It's about the math. I'm not predicting it's going to go straight up from here, but I'm in position for success if we do have a rally with this pivot, with continued dollar decline, continued macro market climb, and so forth. So the commodities comeback are all in position to move this stock higher, and a limited risk option to do so.
Right. Okay. Let's leave it there for that one. And keeping in the energy, at least big picture, looking at Halliburton at $28.95. Energy has been an interesting story. Ben loves to look at every part of it every day. Tell us your thoughts on Halliburton, Alan.
Well, as you well know, Ben and I are old commodities guys. This is what we do. Every commodities drive the markets. It's all about commodities. So you don't invest in anything to understand the underlying commodity, in it. We talk gold, we're talking, lithium here, we're talking oil. You don't look at banks unless you have a handle what's going on with interest rates. So it all comes back to commodities, it's a common denominator. All right, so oil itself is between 90 and 110 for the last 4 months. So it got knocked down 25% by the Fed's action intentionally, but we've also seen rates decline more than 25% as well. So that's a sign of stabilization. And more importantly, is Ben's a price guy, results. The market results have been positive since that's happened. So everything has stabilized, and we've resumed this upward push in stocks, lower VIX, lower energy, and so forth. All right, so Halliburton. Halliburton's been between 27.5 and 30 for a month. So a breakout of that range targets 32.5. There's a gap up above at 35, a gap at 39, and a gap at 43. Now, for 2 months, we dropped from 43 to 26, a nice healthy pullback. 35 is the midpoint. And again, that's that first gap. So there's a lot of potential to set up here. And just to throw in the old time machine here, pull up when we talked last time, July 26th, we talked about Twitter, Cisco, and Alcoa. So those stocks all had gaps above, and guess what? They're making a run to fill those in. When we talked about those. So Halliburton, I'm looking at a January option, January 25 call, in the money a couple dollars. It's trading for about 6 or so, and it's got a delta about 75% in position for if and when there's any bullish breakout in oil itself.
Right. Okay. Well, from one commodity trader to the other, you guys, I know you love this. So what are your thoughts on Halliburton there, Ben?
I'm going to be real short. Basically, we have to agree to disagree in this one. across the board here today, guys, on this Friday. But this is a great combination of the other two stocks we looked at in terms of shares of HAL. Let's begin with the hourly time frame, or the 4-hour in this instance. The sharp decline along the lines of what we talked about as far as NEM in reaction to earnings. If you remember, the sideways consolidation. I talked about an upper or lower extreme that had been established, 31 down to 26. We've got that here. Remember when we looked at the daily time frame in terms of CCJ, I think it was, we saw a couple lower highs, if you remember that. Well, here we've got a couple key highs that we failed off of. In this instance, a higher high, if you remember, back in June, we took out the April highs, but we're unable to sustain those upper levels. Here you can see the big move lower, and then again, that consolidation we just looked at. But this is what has me concerned, again, how this is a combination of sort of both these, all three of these names we've talked about. Look at what just happened. Again, remember we were talking about the midpoint earlier in terms of CCJ. If it fails, if it starts to roll over, it appears as if that's happening in terms of Halliburton. You can see a series of lower highs here, and then, again, struggling to get above that 40-45 level. Potential to open up a door for a retest. I don't want to say we're going to get as low as 4.25 again. I mean, that was the pandemic low, but it does look like we still continue to struggle to regain composure here. And this is another one, a chart that I have a hard time getting excited about from a bullish standpoint.
Right. Okay. Any rebuttals? Any final thoughts, Alan?
Of course. All right. A phrase.
Oh, I'm sorry. We're out of time. No, I'm just kidding.
All right.
Go ahead, Alan.
Price pop potential. Every commodity always has price pop potential, and crude oil is probably the biggest example of that because they're strictly supply and demand markets. But again, I'm positioned for a longer period of time. I've got limited risk. And as a trader, you always have to know what your worst case scenario is. Worst case scenario is if I'm wrong, I bought an in-the-money option. You know, I have the right to be long from a much, much lower level, and that's something I'm comfortable with. The low on this recent range is 26. And, you know, I have the right to be long from what here, 25. So it's about strategy, probability, being in position. And I'm not trying to pick the exact time these things are going to pop, but I have these chips in play that put the odds on my side.
Yeah. Good to see you both. Thank you very much. An exciting big three today, right?
Thank
we
you.
looked at Newmont Mining, Camaco, and Halliburton. Thank you. Alan Nuckman, bullseyeoptions.com. Ben Lichtenstein, thank you both very, very much.